Home equity lines of credits, or HELOCs. I'm going to describe what they are, when people should take them in my opinion, what the advantages are, and some minuses of having one. This is, by the way, a very timely topic based on the phone calls that we get. A lot of people are sitting on low interest rates, but they have a lot of equity in the house. For example, somebody's mortgage is at 3.5% and they want to get some money against the house. So there are normally two options: get a cash out refinance, which today unfortunately has a higher rate, or keep the 3.5% mortgage, keep the existing mortgage, and get an additional mortgage as well. It's called line of credit. In the best description that I can think of it, home equity line of credit, again, or HELOC for short, is a credit card against the house. You see how you use a credit card. Let's say your credit card has a limit of $10,000 and you went shopping with this. Now you have a balance of $1,500, so you only use remaining $8,500 in this case. Once you pay it off, the whole $10,000 becomes available to you again for a credit card. Same thing for the HELOC. Okay, if you get a home equity line of credit for the house, let's say for $200,000, you can use it, you can pay for it. Once you pay it off, this line becomes available to you again. But that's only for a period of time, usually for 10 years. I will give you some more description of this so you can understand it better. So let's start with the pluses. The pros is you only make interest-only payments. So for example, you borrow $200,000 and let's just say the rate is 6%. So interest on $200,000 at 6% is $12,000 a year. Very simple math, 200 by 6%. You divide it by 12, you get a monthly payment of $1,000. So that's what you're going to pay on a $200,000 home equity line of credit. And accordingly, it will change when the rate is different or the amount is different. Okay, so you make interest payments only. With that, your balance obviously doesn't change. If you borrow $200,000, you pay $1,000 a month at 6%, if that's your rate. Next month it will remain at $200,000. You make another payment. But the plus is that the payment remains low relative to a regular mortgage at 6%, where you need to pay mortgage principal and interest. Next plus, you pay only on the borrowed amount, just like a credit card example. Let's say the bank gave you a home equity line of credit or HELOC for $200,000, but let's say you only need a small portion of it. Let's say you only need $15,000. You take $15,000 and now you only pay interest on $15,000. Once you repay this $15,000, no more payments. And you can do this for the next 10 years. You see, after 10 years, the bank will close this line. You will no longer be able to take any more amounts from your line of credit. You can try to renegotiate with the bank, apply for the new one, but that's 10 years later. Now, why am I saying 10 years? You see, if there is a balance, let's say you took something and there is a balance at the end of 10 years, you will then have another 10 or 20 years to repay it without the ability of taking any new amounts. Okay, so again, the benefits are interest-only payments that I described, and you pay only on the amount you borrowed. However, there are some minuses with this program. Number one, it can only have a variable rate for a real traditional line of credit. You know how recently in the past year, Federal Reserve increasing the rates 0.75%, 0.25%, that is directly affecting the rate on your home equity line of credit. So there is a ceiling. It's usually pretty high, 14-15% depending on the bank. Right now, the prime rate is at around 8%, so your home equity line of credit is usually tied to the prime rate. And it's not equivalent to it, but it's tied to this. What does it mean? Let's say the prime rate, as I said, 8%. So your line of credit might have a rate of prime, which is 8, plus another 1%. So you will have 9%. Now, it doesn't mean it'll always be at 9. Once the government will start reducing the rates, automatically the rate on your home equity line of credit will go down. If they continue raising them, that means they will go up. So there's uncertainty with the rate. So to me, uncertainty is a minus. So that's why I put it in the cons category. The second is when you come to a mortgage broker and you want to apply for one. It's possible to get, but our formulas and our parameters to qualify are a little bit harder compared to a traditional mortgage. Because of number one, that the rate can go so much higher, banks want to be safe, and they use more restrictive formulas for people to qualify for it. And unfortunately, many large banks got out of this business altogether. They no longer offer HELOCs. We are here at R&J Capital, still do. So if you need to know more or need to apply for one, please feel free to contact us. I hope you like this video. Please comment, ask your questions, subscribe to our channel. We will be coming out with a lot more interesting and useful content.